Ladies and gentlemen, good day and welcome to the Arkade Developers Limited Q2FY26 earnings conference call, hosted by Adfactors PR Private Limited. This conference may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Amit Jain, Chairman and MD, Arkade Developers Limited. Thank you, and over to you, sir.
Good evening, everyone. I would like to extend a very warm welcome to you all for Arkade Developers Limited earnings conference call for the second quarter and half year ended 30th September 2025. I would like to begin by expressing my gratitude to you all for taking the time to join us today. We have on call with us Mr. Samset Sethi, CFO, Ms. Dipti Nair, Head of Marketing, and Adfactors PR, our investor relations team. We have shared our earnings presentation. I hope you all must have gone through it. As you all might be aware, the real estate sector, particularly in mature markets like Mumbai, has been undergoing a paradigm shift from affordable to premium housing, especially as consumer trend towards aspirational living spaces. Consumer preference to upgrade their housing standards is complementing the demand from first-time buyers. From a medium to long-term perspective, the market looks very well positioned for steady growth, supported by favorable economic conditions and strategic opportunities. We are optimistic and well positioned to capitalize on the emerging trends. I would like our Head of Marketing, Ms. Dipti, to share a brief overview of our sector at last, before we get into our recent developments, business and financial performance for this period.
Thank you, Mr. Jain. Talking about the industry outlook, a recent IDEF report reaffirms that India's real estate sector is the second largest employment generator after agriculture and is poised for a tremendous growth from $200 billion in 2021 to $1 trillion by 2030, contributing nearly 13% to the country's GDP. Key demand drivers such as rapid urbanization, earning income levels, and growing preference for nuclear families continue to fuel expansion across residential, commercial, and retail segments. On the residential front, the momentum remains strong. Home sales have surged 77% since FY19, while luxury home sales price, which is 4 crores and above, have rose 75% in 2023 and onwards. The commercial segment has also witnessed a record performance with 89 million square feet of office space leased in 2024, while industrial and logistic demand has reached 38.8 million square feet. In short, India's real estate sector continues to display resilient fundamentals and strong growth potentials across all key segments: retail, commercial, industrial. Before we move ahead, I'd like to share a recent strategic milestone from Arkade Developers. We secured the branding and naming rights of Bhangur Nagar Metro Station at Goregaon West, and it's now known as Arkade Bhangur Nagar. A move aligned with our long-term brand vision, this initiative reinforces our commitment to the Malad-Goregaon belt, where we have a strong upcoming project pipeline and see immense potential for sustained growth. Further, we've completed 4 residential projects, namely Arkade Adonia, Arkade Aspire, Arkade Serene, and Arkade Jayashree, and our current pipeline of ongoing projects include Arkade Vistas, Arkade Views, and Arkade Eden. So with 5 more projects set to launch in the coming months. I would I'd like to now hand it over back to our chairman, Mr. Amit Jain, to take us through the key developments and highlights for the year. Thank you.
Hello. The first half of this fiscal year has been truly remarkable for Arcade developers, building on the strong momentum we achieved in the previous year. We continue to make steady progress, acquiring both greenfield and redevelopment projects across the MMR region, in line with our long-term growth vision. Further strengthening our footprint in MMR's central corridor, we recently entered into a share purchase agreement to acquire 100% shareholding in Woolen and Textile Industries Limited, Manduk West. This transaction, valued at rupees 148 crore, includes a land parcel of 14,363 square meters, with a potential GDV of rupees 1,000 crores, and marks our second acquisition in Manduk. This strategic move reinforces our commitment to value-driven development in prime micro markets, while unlocking the full potential of key land parcels across the city. At the same time, we are proud to share that our ready-to-move-in OC received projects, Arcade Aspire, Arcade Crown, Arcade Prime, and Arcade Aura, are now completely sold out. This is a testament to the market's confidence in our brand, our delivery record, and the enduring appeal of Arcade's homes. Adding to that, the festive season has started on a strong note for us, with robust inquiries and conversion momentum across our ongoing and upcoming projects. From a policy standpoint, the recent GST reduction has provided welcome relief to home buyers, improving affordability and strengthening consumer demand across categories. Meanwhile, the RBI's decision to keep repo rates unchanged continues to support stable borrowing costs, sustained market sentiment, both critical for the sector's growth. We also recently marked a significant milestone, 1 year since our IPO. On behalf of the entire Arkade family, I extend my heartfelt gratitude to all our investors, customers, and partners for the trust and confidence you placed in us on this journey. What continues to differentiate Arkade developers is our disciplined execution-first philosophy. While many players tend to accumulate large landmines without timely development, we follow a focused, delivery-led approach, taking on projects we can execute efficiently, deliver ahead of schedule, and then move swiftly to the next opportunity. This ensures faster revenue recognition, lower holding costs, and sustained growth momentum. The ethos has shaped not only our strong track record, but also our reputation in a trusted, execution-focused developer within the MMR real estate landscape. Looking ahead, we remain confident and well-positioned for accelerated growth, driven by a robust pipeline of strategic acquisition, high-value redevelopment projects, and future-ready greenfield developments. Our focus remains unwavering to build sustainably, execute with precision, and create lasting values for our customers, partners, and stakeholders. With that, I would now like to invite our CFO, Mr. Samsir, to take you through the financial performance for the period.
Thank you, sir. Good evening, everyone. I will now brief you on the consolidated financial performance for the second quarter and half year of FY26. Our revenue for Q2FY26 stood at rupees 265 crores compared to rupees 203 crores in Q2FY25, reflecting a growth of 30% year-on-year. On quarter-on-quarter basis, the revenue has grown by 60% from rupees 165 crores to rupees 265 crores. EBITDA for the quarter stood at rupees 63 crores as against rupees 59 crores in Q2FY25, registering a year-on-year growth of 8%. On quarter-on-quarter basis, the EBITDA rose by 85% from rupees 34 crores to rupees 63 crores. The EBITDA margin for Q2FY26 stood at 24% compared to 21.5% in Q1FY26. Profit after tax came in at rupees 46 crores, up from rupees 43 crores in Q2FY25, showing a growth of 6% year-on-year. On quarter-on-quarter basis, PAT has grown by 59% from rupees 29 crores to rupees 46 crores. The PAT margin for the quarter stood at 17.3%. Revenue for H1 FY26 stood at rupees 430 crores compared to rupees 329 crores in H1 FY27, reflecting a growth of 31% year-on-year. EBITDA for the half year stood at rupees 98 crores as against rupees 101 crores in H1 FY25. The EBITDA margin for H1 FY25 stood at 23%. Profit after tax came in at rupees 75 crores, up from rupees 74 crores in H1 FY25, showing a flat growth year-on-year basis. The PAT margin for the period stood at 17.3%. Now, coming to some of the key operational highlights for the quarter, we achieved a pre-sale of rupees 331 crores during Q2 FY26. The area sold during the quarter stood at 1.1 lakh square feet, up 4% year-on-year. Collections for Q2 FY26 came in at rupees 320 crores, registering a year-on-year growth of 7%. That's all from our side. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhananjay Mishra from Sunidhi Sec. Please go ahead.
Yeah, hello sir. Am I audible? Hello.
Please go ahead.
Yeah. While we have done quite well in the first half in terms of results as well as business development side, like we have acquired 6,300 crore, we have added 6,300 crore GDV. But in terms of launch pipeline, I mean, in the first half, we have not done any launches. So which all projects we are confident of launching in the balance months of this financial year and H1 of the next financial year?
So this year, we are going to complete 2 projects. 2 of the ongoing projects in this financial are going to see completion. One is Arkade at Vivekananda, and second is Arkade Eden at Malad. And all our launches are scheduled for the next financial year, that is 26-27. We are looking at 6-7 launches. And say in the first half of the next year, we are launching a project in Santa Cruz, 1 project in Bangalore Nagar, and 1 project in Malad West Liberty Garden. 3 projects are certain to be launched in the first half of the next year. Remaining 3-4 projects should be launched in the second half of the next financial year.
Okay. So this year we are not expecting any new launches. Whatever sales will come from
We are looking at targeting to complete ongoing projects here.
Okay. And in terms of, if you can also give the cash flow number for the first half. What was the total operating cash flow as happened, and what was the total investment we have done?
Sunset.
Yeah. So on operational front, our operating cash flow for first half is about, which as per the financial statement what we have submitted is negative 483 crores, but it includes the land bought by us during last six months, So you can say 550 crores of land we have bought during last 6 months. So this is about positive 50 crores operation cash flow.
Okay. Okay, that is all from my side. All the future news.
Thank you. The next question is from the line of Darshit Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, team. Thank you so much for taking my question. Hopefully, I'm audible. Hello.
Yes, sir.
Hello.
Please go ahead.
Yeah. So, sir, just wanted to know, I think we had, committed to, a 10,000 crores roadmap in the next 5 years, sir. So for that only, I just wanted to, ask, so current year, because I think we're saying we'll have no launches, so how would FY27 look like? Because I think current year at our revenue rate, what would our revenue be this year and next year? How are we expecting these years to pan out, sir? Hello. Audible?
Amit sir, are you there?
Yeah, I'm here.
Okay. So will you take up this question?
There was some disturbance, if you can take it ahead.
So hi Darshan. So you are asking about the pipeline. Yeah. So you are asking about the pipeline, what we have and the launches,
Correct. We are saying around 6 to 7 launches next year. This year we are not expecting a launch anymore.
Correct.
So what is the exact, any kind of guidance in terms of pre-sales for next year, and what kind of revenue will be, recognized in the current year? Because the 2 projects that are going to get completed, I think are 250 crores, if as per the PPT that I could see. So we wanted to, get a guidance in terms of what's the revenue and PAT figure for this year and pre-sales for next year, sir.
Yeah. Darshan, so we don't give the guidance for the pre-sales as such, but we believe in growing by 20%, year on year. Second question, you asked for the recognition of the revenue. So you're right, we are completing the 2 projects this year, but we are following the percentage completion method for revenue recognition. So, the revenue will be recognized not only for the 2 projects, but whatever percentage completion work we do, those revenues also will get recognized in this financial year.
Okay. We follow the percentage completion method.
Yeah.
Okay, fair enough, sir. And so, and also I think with terms of 20% growth in revenue is fair enough, but I think we are stating of around 20% margin for PAT. I think H1 has been a bit slower and for that. So could you, help me? Will we be able to reach the full year 20%, PAT?
So we are optimistic about it. We are hopeful to reach the target.
Okay, fair enough, sir. And so I understand we don't give pre-sales number, but in general, next year, what will be the cumulative amount of launch that we are going to do? Because I understand it's 6 to 7 projects, but they'll also be maybe in phases or something. So what kind of launches in some absolute numbers are we expecting?
7 project launches combined, having a potential sale of 8,000 crore plus.
Oh, okay. The 7 launches itself have 8,000 crores plus potential. That's really great to No, sir. And so just wanted to know, like, in terms of, we are majorly in MMR, so how do you see the, our environment right now? Like, a lot of projects are going in redevelopment, around, like, every area is having some or the other redevelopment. So will there be a glut in the market, or, how do you see demand panning out?
So the location of all our projects is very premium and in mature markets where the demand is always more than the supply options available. Also, one of the biggest project launch next year that we have is of a land parcel project and not redevelopment project, which is a very rarest of rare products available in terms of land parcel projects, So that cannot be compared with the other ongoing redevelopment projects. And it will have its own demand because of being a land project.
Okay. Fair enough. So demand is no issue right now on what we can see.
Oh, that gets sold, yeah.
Okay. Yeah. Fair enough. That's it from my side, sir. Thank you so much. All the best.
Thank you. Anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Jayashree Bajaj from Trinetra Asset Managers. Please go ahead.
Thank you for the opportunity. As I can see, the inventory and debt are rising alongside the slower pre-sales, which are signaling the liquidity stress. So can you please tell me how is the management ensuring the working capital efficiency?
So, hi Jay.
Yeah. Carry on, something.
Yeah. So Jayashree, I can see that there is no increase in inventory as such because as of 31st March, my inventory was 906 crores and as of September also it is 906 crores. The second question, what you are asking about this rise in the borrowing, we have acquired about 550 crores of land in last 6 months. We have paid about 360 crores for the Goregaon land and for Thane land we paid 175 crores. With that 550 crores of acquisition, our debt has risen by hardly 50 crores, compared to last year, compared to March 25. So there is no much increase as such.
Okay. So let me know, am I interpreting it right? Are we shifting to asset-light model to land-heavy expansion? So is it a strategic change or a temporary deviation?
No, we are also having asset-light model also. We are having 8 to 9 redevelopment projects acquired in the similar timeline after the IPO. So it is a fine balance and combination of both the sides.
Okay, got it.
Yeah.
Thank you. That's all from my side.
Thank you. The next question is from the line of Nimish Pandya from India INV. Please go ahead.
Hello, sir. Thanks for giving me this opportunity. Am I audible?
Please go ahead.
Hello. Yes. Actually, would like to know the plans over the next 3-5 years. Also, what would be the share of greenfield versus the redevelopment?
So the projects that are being launched next year, 26, 27, next financial year, the top line distribution of greenfield and redevelopment is going to be more inclined towards greenfield. To major projects that are coming are greenfield projects. But in the long term, the pipeline that we have is having a fine balance of around 50-50% top line from greenfield and redevelopment.
Okay, got it. So, also I have one more question, sir. Any plans to buy land parcels for the future development?
No, right now we are looking at focusing on launching the land parcels which we have already acquired, Goregaon, Pandup and Thane one.
Okay, got it. Thanks a lot.
Thank you. Anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Arkade from India INV. Please go ahead.
Good evening, everyone, and thank you for the opportunity. Sir, I have a few questions. So, sir, can you just throw some light on this bamboo acquisition which we have done, and how are we aligned with this woolen and textile industry land parcel?
How are we?
How are we aligned with this woolen and textile industry land parcel?
We entered the MOU for the company transfer of the share transfer of the company, woolen and textile, and we'll be completing the transaction very soon.
So, sir, just to add to that, so what type of development we are planning to, newly acquired land? So, what type of development is planned on the same?
The residential layout is planned in the layout.
Okay.
Residential layout with 1 BHK and 2 BHK unit is planned.
Okay. And sir, any other upcoming, have you seen any upcoming developments over there?
No, the PD team is always active in the market. They keep on scouting projects. It's an ongoing thing. But only as and when something fits into our criteria do we go ahead for the project.
Okay. And sir, one more question. Can you give a split between this redevelopment and the greenfield projects in the upcoming launches we have?
We have 3 to 4 redevelopment projects in the upcoming launches.
In the upcoming launches?
Okay. Yeah, next financial year. The Santec Road, Mangur, Malad, and Borivali, we have 4 upcoming projects which are redevelopment.
Okay, sir. Got it. Thank you, sir. Thank you so much, sir.
Thank you. The next question is from the line of Vikrant Sahu from India INV. Please go ahead.
So thanks for the opportunity, sir. So I have 2 questions. So first is, do you see better opportunities for new development outside India? And the second one is, how does your approach of limited land banking contribute to stronger financial discipline or faster project turnaround?
So I wouldn't say whether a project or development outside India is better or this is better, but we are focused on MMR region currently, and we will continue to have our focus here. As of new markets, we'll study as and when we reach a stage of not being able to identify projects here. As far as we keep on getting projects here, we'll prefer the NMR markets, which has always been our stand.
Got it. And the second one was the approach of limited land banking contribute to stronger financial discipline.
So we are focused on delivery, so we just don't want to have too many things on our plate and not being able to do justice to the delivery, which leads to financial indiscipline and things may go like you. We don't want to chew more than what we can eat.
Okay, got it.
Yeah.
Okay, thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Harshit Sachdeva from Columbus Capital. Please go ahead.
Hi, sir. Good evening. Am I audible?
Yeah, Harshit, go ahead.
Sir, very good numbers on the top line front for both H1 and Q2, but EBITDA and PAT थोड़े flat हैं. And despite area sales are also up, collections almost flat. So, sir, any reasons for profitability remaining flat? Is it any expenses that came up, or also do you think collections are down because delayed purchases because of that GST rollout, and next quarter we'll make up for that?
We should see a better second half of this year. The figures already make the second half what we have started seeing in October, the festive season, are much better than what it was in the first half. And also all our ongoing projects are now at visible stage of construction, because of which the interest of the buyer is increased and the sales velocity has gone up, and effectively the cash flows also have improved. So by the end of the year, when we consolidated, we look at the annual figures, they should be better on a year-on-year basis. Yes.
So on the profitability front?
Profit for sure is going to be better on a year-on-year basis.
Okay.
Yeah.
Thank you very much. As there are no further questions from the participants, I now hand the conference over to Mr. Amit Jain, Chairman and MD, Arkade Developers Limited, for closing comments. Over to you, sir.
On behalf of management, we thank all the participants for joining the call. Wishing everyone a happy Diwali and prosperous New Year. Have a safe and joyous one. Thanks.
On behalf of Arkade Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.